Hey, what's up everyone? Welcome back to another Dapper Dividends. I am Russ and I am back in town from sunny Las Vegas, Nevada. Sunny but cool Las Vegas, Nevada. I went out there with my family to celebrate my 15th wedding anniversary and the 20th anniversary of when I met my wife. That is really crazy because pretty soon I will have been with her longer than I was alive when I met her. It's crazy how time flies. I'm going to be 43 in April, and we just had Thanksgiving here in the United States, which made me think and reflect that time is very limited, it's finite, it is a completely non-renewable resource, and how you spend your time will determine your standard of living, which is why we need to make the most of the time that we have. We can't make more of it. We can buy other people's time, which is what I'm doing by investing in companies like the one that I did just buy when I was in the New York hotel and casino in Las Vegas, Nevada. This is a picture of us. We stopped for some pizza, and I decided right then and there that I wasn't going to gamble any more money, and I was going to instead take a piece of Vegas home with me in order to receive money every quarter, every year, like clockwork, buying more of other people's time so I can spend less of mine doing the things that I have to do and do more of the things that I want to do. Now, before we get into it, I do want to ask you to give me a like and subscribe now or at any point during this video. I've got a bit to get to. This is a beginner video on how to invest in Las Vegas, Nevada, or just the gaming stratosphere, the gaming universe in general. And we're going to get into it. And this is how you invest in Vegas. If you're a beginner, this is just to put companies on your radar. Maybe you are a seasoned investor. Maybe this is some things you didn't know or were aware of. And this is how you invest in Vegas. There's 4 channels to invest, and it's through casino organizations such as MGM, Caesars, or WYNN. There are casino REITs such as MGP, VICI, or GLPI. The gaming manufacturers, the companies that make the games that people are playing, such as SGMS or IGT. And then the gaming ETFs, the exchange-traded funds, they're just umbrellas for the hands-off investors, such as BJK. First up are the casino organizations, such as my first pick, MGM, ticker symbol MGM. MGM Resorts International is a holding company that owns and operates casino resorts domestically and MGM China. The domestic resorts consist of non-gaming operations, including hotel, food and beverage, entertainment, and other non-gaming amenities. The casino operations feature a range of slots, table games, race, and sportsbook wagering. MGM, big company. It was kind of cool while we were there. They have at the south end of the strip near the Las Vegas, welcome to Las Vegas sign, the famous sign. Here's a video of the arches that we took. These are brand new. You can see the street is still under construction. It is by the stratosphere, but on the south end, you have the MGM Grand, and then across the street, all in a row, you have the Mandalay Bay Resort and Casino and Hotel, the Luxor, which I love the Luxor. I'm very fond of the Egyptian architecture, the Excalibur, and then right across the street from that is the New York Hotel and Casino, where my wife and daughter had a blast riding that roller coaster. Now, they had been paying 52 cents a share dividend, but they cut that to a microscopic 1 cent a year after the pandemic hit. A lot of these companies, this is going to be a recurring theme throughout the episode. A lot of companies, and rightfully so, because the first order of business is to be profitable. If a company is not profitable, bad things are coming. They're going to have to start making drastic changes. Unfortunately, a lot of the gaming industry lost, especially the hotel and casinos, they lost over 90% of their revenue in March and April when we were still figuring things out and everything was on lockdown. Next up is the second big one, Caesars Entertainment. Caesars owns a slew of hotels on the Las Vegas Strip. Caesars Entertainment operates as a casino entertainment company in the United States and operates resorts primarily under the Caesars, Harrah's, Horseshoe, and Eldorado brand names throughout the United States. They were founded in 1937. They're based in Reno, Nevada, and they operate the gaming facilities Harrah's, Rio, Caesars Palace, and the Flamingo in Las Vegas, where we did stay at the Flamingo. Caesars currently does not pay a dividend, and they are trading at their all-time high. This is one that I would probably stay away from because the focus for me is dividend growth investing. I want that passive income coming in, so I give a much higher weighting to companies that pay a dividend. So right between the first two, I'm automatically more inclined to go to MGM, as I'm sure once we get the pandemic under control, they're going to kick that dividend, fire it back up. Next up is the Las Vegas Sands. We did find where the Sands Hotel used to be. It's where the Venetian is. Right out front, the Venetian, they have a plaque, and in the ground you can stand where the Rat Pack stood, in the exact same spot, with this famous picture from Las Vegas, Nevada. And with that, Las Vegas Sands Corp is a developer of destination properties that feature accommodations, gaming, entertainment and retail, convention and exhibition facilities, celebrity chef restaurants, and other amenities. And as I said, they do operate the Venetian and the beautiful Palazzo on the Las Vegas Strip in Las Vegas. They had been increasing their dividend for at least 8 years and were at $3.08 a share until the pandemic hit. Las Vegas Sands cut the dividend completely, but I would look for it to come back when the pandemic gets under control. I'm going to be saying this quite a bit. The last casino operator I have for you is Wynn Resorts. Wynn Resorts is a developer, owner, and operator of destination casino resorts with a range of amenities, including dining, retail, entertainment theaters, and meeting complexes in Macau and Las Vegas. Now, the company's Macau operations include Wynn Macau and Wynn Palace. The company's Las Vegas operations include Wynn Las Vegas. The company is constructing Wynn Boston Harbor, a casino resort in Everett, Massachusetts. Wynn had been paying a choppy dividend since 2017, and they had been increasing it since 2017, an average of 38%. But them, like many others, cut the dividend after the pandemic hit. Their stock is down 27% year to date and does look like a fairly attractive investment opportunity, considering that they lost 97% of their revenue during the pandemic in March and April. They had no choice but to cut that dividend. There's really that left them with no wiggle room. They had to cut it. So they could have some nice increase in share price value, and I fully expect that they will reinstate that dividend when things get back to some semblance of normalcy. Now, two other casinos that I didn't get to because I could just spend all day on this, and this is going to be long enough, are PENN Gaming, ticker symbol PENN, and Boyd Gaming, ticker symbol BYD, as you see here. I would definitely urge that you check those out and put them into your considerations if you are interested in getting into the gaming. All right, so next up we have the casino REITs. This is the sector that I focused on as a dividend growth investor because this is a little bit more of a reliable sector because they are the owners and the landlords of the property that the casinos operate in. So the way is you're going to find out that it works is the casino. So in this case of our first one here, MGP, MGM Growth Properties is one of the leading publicly traded real estate investment trusts engaged in the acquisition, ownership, and leasing of large-scale destination entertainment and leisure resorts that include casino gaming, hotel convention, dining, entertainment, and retail offerings. MGP currently owns a portfolio of properties consisting of 11 premier destination resorts in Las Vegas and elsewhere across the United States. As of December 31st, 2017, these properties collectively comprise approximately 27,500 hotel rooms, 2.7 million convention square footage, 150 retail outlets, 300 food and beverage outlets, and 20 entertainment venues. What that means is MGM does not own the property that you see their brands on. They have a 50-year agreement with MGP to lease the brand name to put on the buildings and so forth, and the operator is the casino company. So MGM is the casino operator, and they rent the space from MGP, from MGM Growth Properties. Now, they are very heavily affiliated with MGM Growth Properties, as I'm going to show you in just a second. But in case you weren't aware, this is very common, and a lot of the casinos, they don't own that land. There are other companies that acquire and lease out the land that the casinos are operating inside of, and that gives them, like most spin-offs, that allows the casino to focus on running the casino and not have to worry about running the real estate, acquiring the land. MGP is an umbrella partnership real estate investment trust, or an UPREIT. So what an UPREIT is instead of selling property, an owner can contribute it to an UPREIT in exchange for units, which generally have the same value as the contributed property. This offers them very favorable tax treatment, as well as keeping their investment. MGM does control 63.7% of the partnership units, which give them a non-controlling interest in their financial statements. This is something that's very interesting, that MGM is protecting themselves, so they didn't just fully spin off all that land and property to this, which was created, MGP was created in 2016. They are covering their bases, and they have a very strong foothold within the MGP REIT. One thing I do like here is that you can see they have built-in contractual escalators, and acquisitions have a 77.5% cash growth since the IPO in 2016. As I did say, the escalator is 2% until 2024, and after that, the escalation is based on a tenant's adjusted net revenue to rent ratio, which is built in to pace inflation to help keep them growing and make sure that they're receiving money and they're receiving increasing rent to stay ahead of inflation, and they can keep paying us this very nice dividend, which is currently yielding 6.38%, and they have increased it 9 times out of the 15 dividends paid. Now, if you look at this, you will see that from their last presentation, they show they have a higher rent coverage and dividend yield than that of the one and only ticker symbol O Realty Income that I love, that everybody loves. The thing to take with a grain of salt is that Realty Income has done this for many, many decades. They are one of the strongest, if not the strongest, dividend-paying REIT. They are the monthly income company, as they do so rightfully claim. And this they have to show. MGP has to show that they can hang with the big dogs. They are such a new company. It's kind of funny to see that, but hey, it is what it is. Can they keep this up? I don't know, but I did it. I took the plunge. I took a bite out of MGP while I was at the Big Apple taking a bite out of pizza. And I just went ahead and I invested in my self-directed IRA now, because if you don't know and you aren't aware, REITs are non-qualified dividends, meaning that you have to pay your ordinary income tax rate. They are not favorably treated. So if you can and you have the ability to do so, I would strongly recommend thinking about holding all your REITs inside of a tax advantaged account where they just grow and you don't have to worry about paying that dividend. You don't have to worry about paying taxes on that dividend until it's time to take your money out, unless it's in a Roth. If it's in a Roth, then you're not going to have to worry about paying anything ever again. So help you God, unless the politicians change the tax code. Next, we got the Caesars version of what MGM and MGP have done. This is VICI. VICI Properties was formed as part of the Chapter 11 bankruptcy reorganization of Caesars Entertainment Operating Company, the largest division of Caesars Entertainment. After placing CEOC, which is the Caesars Entertainment Operating Company, into bankruptcy in January of 2015, Caesars proposed splitting CEOC into 2 companies, a REIT, which would own the company casinos, and an operating company, which would manage them. This is what we were just talking about with MGM and MGP, is that VICI owns the buildings, the physical land that the casinos are on. They own the building, they own the land, they are the landlords, and Caesars is the casino operator, They are running the operations. They don't have to worry about focusing on the day-to-day acquisition and managing the real estate aspect of it. They just run their brand, they run the casino, and try and take as much money from all of the gamblers that come in. And why is Vegas so beautiful and opulent and gorgeous? It's because Vegas was not built on winners. Vegas is built on all the losers. Never forget that. VICI Properties is primarily engaged in the business of owning, acquiring, and leasing of real estate assets across gaming, hospitality, entertainment, and leisure destinations. It operates through two segments, real property business and golf business, and consists of approximately 28 gaming facilities, chiefly the Caesars, Harrah's, and Horseshoe brands across approximately 47 million square feet. Its properties are located in 9 U.S. states, containing approximately 18,000 hotel rooms and features more than 200 restaurants, bars, and nightclubs. They have been paying a dividend for over 2 years now, and they have an increase of 17% for an annual yield of 5.18% or $1.32 annually. It was really close for me to go with VICI or MGP. Now, I did buy a starter position in MGP, and I may buy a starter position in VICI to just have that Caesars exposure. I may also buy a portion of this. It's just that the yield was a little bit bigger, and maybe I'm gambling here. I'm looking at a yield trap in both of these or one of these, but I went with MGM, Growth Properties International. And I very well may go VICI, but now you are aware, and if you didn't know, you know that the casinos do not own the property. That is a completely separate organization. They are completely two separate entities, and if you invest in the CZR, you are not investing in the tenant space. You are not investing in the actual brick and mortar business that you see the company name, the brand name on top of when you walk into the casino. The last one I have for you is ticker symbol GLPI. As we saw with MGM and MGP, and we saw with CZR and VICI, you remember I mentioned PENN, Penn and Boyd, B-O-Y-D. Penn and Boyd are in the exact same boat, and they are with GLPI. It's very linear, it's very well structured, and now you're starting to get the hang of it and understand this as we do take a look at GLPI, Gaming and Leisure Properties Incorporated. They are a self-administered and self-managed Pennsylvania REIT. The company is engaged in the business of acquiring, financing, and owning real estate property to be leased to gaming operators in triple net lease arrangements. The company has 41 rental properties consisting of the real property associated with 32 gaming and related facilities operated by PENN National Gaming, and the real property associated with 5 gaming and related facilities operated by El Dorado, the real property associated with 3 gaming and related facilities operated by Boyd, and the real property associated with the Casino Queen in East St. Louis, Illinois. So they do pay a small dividend of 11 cents that was cut from 67 cents in April in the wake of the pandemic. And as you see, just very concurrent with many of these companies, they had no choice but to cut. The casino and hotel industry was just hit hard. They were crushed by the lockdowns. And I think once things start to return to some sort of normalcy, some semblance of how things were, I don't think things are ever going to go back to the way that they were, but there will be a new normal. And as businesses are very entrepreneurial, you can rest assured that they will find a way to be profitable and operate within the new normal that we will be seeing on the horizon. And moving along, we're going to shift our focus to the game manufacturers. So we've covered the casino operations. We've covered the brick and mortar REITs that own that. But now, what are they operating? They're operating the games. Who makes the table games that are inside the casinos? Well, I've got 2 for you. And one of them I was really surprised because I was not aware of during my research. First up is Scientific Games Corporation, ticker symbol SGMS. They are a developer of technology-based products and services for the gaming, lottery, and interactive gaming industries. Their portfolio includes gaming machines and game content, casino management systems, table game products and services, instant and draw-based lottery games, server-based gaming and lottery systems, sports betting technology, lottery content and services, loyalty and rewards programs, interactive gaming, and social casino solutions. They also design, develop, manufacture, market, and distribute a portfolio of gaming products and services. Their lottery segment consists of its systems-based services and product sales business and its instant games business. Its interactive business segment includes social gaming and interactive real money gaming, and their games, I did not realize this, are available on Facebook, Amazon, the Apple App Store, and the App Store on Google Play. That's really something interesting. They are everywhere. They are in table games, the cabinets, the hardware, lottery, scratch off, instant games. They got games that are non-wagering games on Facebook and the App Store. I had no clue of the reach that SGMS has. Their tentacles are everywhere in this industry, and they look like a really good play. Now, they don't pay a dividend, and during the height of the pandemic sell-off, they were down to $3.76 a share. I wish I would have recognized that, because if I was aware and they were in my radar, I would have definitely bought some. I was too busy with McDonald's and Starbucks and Johnson & Johnson buying those titans of dividend growth that were way down. This is coming back. People are still going to gamble. They need entertainment. Next up is ticker symbol IGT, International Game Technology. They are an end-to-end gaming company engaged in operating and providing an integrated portfolio of technology products and services across various gaming markets, including lottery, online and instant lotteries, electronic gaming machines, sports betting, interactive gaming, and commercial services. Their segments are North America Gaming and Interactive, North America Lottery. They develop and deliver games, systems, and solutions for land-based casinos, interactive for wager online play, and the Double Down Casino free-to-play social casino app. Now, they're very similar to SGMS, that they have their tentacles entrenched all throughout the gaming industry, through sports betting, the land casinos, through lottery, through apps, through wagering games online. They are everywhere. Now, they had been paying a stable dividend annually of 80 cents, but it cut after their last payment on March 31st, 2020. You can't blame them. They had to do what they had to do, and we'll hope to see that dividend reinstated. But very, very interesting. I was completely unaware of SGMS and IGT, and once they kick that dividend up, who knows? I may take a nibble at a few shares. Last but not least, for the hands-off investor that wants it all, is the ETFs, the exchange-traded funds. Exchange-traded funds are just a basket of stocks. You don't pick them. There's expense ratios that go with them, because, as you're going to see, companies run the ETFs and they have to make their money. They don't do it out of the goodness of their heart. So you're paying an expense ratio to the management for those ETFs. A good website that you can go to for ETFs is etfchannel.com. You can type in a company or the ETF. So for instance, I typed in MGP and then searched for ETFs holding that. That's how I found the first one. Is ticker symbol BJK, the Van Eck Vectors Gaming ETF. It's an exchange-traded fund launched and managed by Van Eck Associates Corporation. The fund invests in public equity markets globally and invests in stocks of companies operating across consumer discretionary, consumer services, hotels, restaurants and leisure, casinos and gaming, gaming operations, online gaming operations, lottery, bingo, bookie, and other gaming operations, racetrack betting, and the gaming operations sectors. Now, the fund does invest in growth and value stocks, both of companies across diversified market caps, and they seek to track the performance of the MVIS Global Gaming Index by using the full replication technique. The Van Eck Vectors ETF Trust was formed on January 22nd, 2008, so they mirror the MVIS Gaming Index. I was not aware what the MVIS Gaming Index is. The index tracks the performance of the largest and most liquid companies that generate at least 50% of their revenues from global gaming, and they cap the company weightings at 8%. It's a pure play index containing only companies engaged primarily in casino and casino hotels, sports betting, including internet gambling and racetracks. So as I understand it, the MVIS Gaming Index tracks all these businesses and gives them weightings and tracks their performance. And then the BJK ETF mirrors and replicates and tracks the MVIS Gaming Index. So they do have a 0.66% expense ratio, which is good. Ideally, the agreed upon sweet spot for an ETF's expense ratio is 0.50 to 0.75, so 3/4 of a point. They fall right in the middle of that. They pay an annual distribution with an ex-dividend date around the 18th to the 23rd of December. So you have time to get in this, and they paid out $1.13 in 2018 and $1.23 in 2019. Moving along, we have another ETF for you, which is the BETZ ETF, ticker symbol BETZ. This is the Roundhill Sports Betting and iGaming ETF, is designed to offer retail and institutional investors exposure to sports betting and iGaming industries by providing performance of the Roundhill Sports Betting and iGaming Index. The Roundhill Sports Betting and iGaming Index is the first globally designed index to track the performance of the sports betting and iGaming industry. The index consists of a tiered weight portfolio of globally listed companies who are actively involved in the sports and betting iGaming industry. This classification includes companies that operate in-person and/or online sports books, companies that operate online internet gambling platforms, and the companies that provide infrastructure or technology to such companies. As you can see, they have the usual suspects that the BJK did, but they are heavily weighted towards the sports book and iGaming segments of the gambling industry. You can see that the top is DraftKings. It's a very new ETF, and keep in mind that they do not pay a distribution. I couldn't find any information if they ever do intend to pay a distribution. Fun little bonus, when I was doing this research, I came across another one of their ETFs that they own. It's a newer one. The ticker symbol is NERD. The ticker symbol is NERD, which is the Roundhill Bitcraft Esports and Digital Entertainment ETF, which is designed to offer retail and institutional investors exposure to esports and digital entertainment by providing investment results that closely correspond before fees and expenses to the performance of the Roundhill Bitcraft Esports Index, or as they call it, the NERD Index. And what I have for you last is not a pure play ETF. They are a little bit more diversified, which can be a good thing. They do have some of the companies we talked about, but the thing with NETL is that they have some very, very popular companies that a lot of investors do like, and one that we talked about, ticker symbol O, Realty Income. The NETL Fundamental Income Net Lease ETF Specialty Real Estate Funds invest primarily in real estate investment trusts of various types, so they invest in REITs. There are several different types of REITs, including apartment, factory outlet, healthcare, hotel, industrial, mortgage, office, and shopping center REITs. Some funds in this category also invest in real estate operating companies. The fund was created in March 21st, 2019, and has an expense ratio of 0.60%. As I did say, they are a mixed bag, but they have several gaming holdings as well as the popular REITs such as STOR, NNN, WPC, the beautiful ticker symbol O, Realty Income, IIPR, which a lot of people are excited about, GLPI, which we've covered, STAG, STAG, and my MGP. They do pay a distribution, and the ex-date this year is December 29th, and their distribution is paid to them by the constituents and then distributed to the shareholders of the ETF. Their last two quarterly dividends were 27.92 cents and 0.278 cents. Two things, this does have low liquidity, low volume. So if you're going to buy it, it's not something you're going to be able to get into really quickly in and out. But if you're buying for income and you're buying to invest in these companies and be hands-off, you shouldn't want to be selling all the time and trading. This is not a trading instrument. This is an investment. And secondly, the reason that their distribution is a little bit choppy is that the constituents or their underlying pay them the dividends that they receive, and then they skim a little off the top, and then they pay that out as a distribution to the shareholders of the ETF. So if some of those companies cut their dividend or chop it or don't do anything with the dividend and leave it low, they're going to get a different amount, so they can't pay the same distribution. This is definitely not something you buy for growing dividends. It can grow their dividends, but it's just something that you should be aware of before investing into ETFs like NETL. So that's it. We're going to wrap it up there. This is a long one, but you know, I had a lot to say, and this is going to be out here for anybody to find for quite some time. So I put a little extra time, a little extra effort into it. And if you're a beginner and you want to invest in the Las Vegas or the gambling or gaming industry, you now see that there's 4 different ways you can go about it. And then each of those ways has multiple different options that you can go into. Again, I bought MGP because I'm buying for a growing dividend. Now they are new and it is a bit of a gamble, but hey, that's okay. I was in Vegas, so I'll take a gamble. And it's a good gamble. It's a smart gamble that I'm betting on the landlords. I'm betting on the building owners. They're not making any more land. And the casino owners and all the businesses that are inside, they still have to pay their rent money, the rent money that is contractually due and owed. That can change, anything can change, but I feel really confident in MGP. And a very close second was VICI. Thank you for joining me. Expertise comes from the community, so please, in the comments below, let me know what you think. Give me your feedback, share any knowledge or opinions that you may have. I really would like to hear it. And again, if you did find value in this, please give me a thumbs up, a like, and subscribe. I put a lot of time, a lot of work into this to bring this information to you, very consolidated and concise, to get the ball rolling and to show you how easy it is to begin investing inside of the gaming and gambling universe. And in terms of a disclaimer, I am not a licensed financial advisor, and this is not financial advice. You need to speak with a licensed financial advisor and assess your own risk and risk tolerance and portfolio before investing into the stock market. I am long on only 2 of these. I am long on MGP and Realty Income, ticker symbol O. I thank you for joining me. Follow me on Twitter at RustyRam78. I also have a podcast I do twice a week called the Dapper Dividends Podcast. Have a website, dapperdividends.com. And what else? I think that's it. I got a lot going on. I'm a welder. I work in the commercial loading dock industry doing service and installation and some sales when it pops up. So thank you guys for joining me. Check out another video. I'll talk to you later.